Good morning and welcome this morning to Trader Talks in today's market. My name is Ben Watson and there is the opening bell, and that means that the market is up and running, and so are we with our discussion this morning. I'm sitting in for Kevin Horner this morning. Have had the opportunity to do so yesterday. I'm going to be here tomorrow as well, as Kevin is out on vacation, and that's one of the things I want to talk about today is how this not holiday shortened week. Next week is going to be the holiday shortened week, but how this holiday weekend may be impacting the thoughts of the market at the moment. I'm joined out there in the chat by my good friend Barb Armstrong. She's a 20 plus year veteran of the financial markets, and she is a great resource to be able to help answer questions along the way. And I'm joined by all of you. Thanks for joining me, whether you're here in the live version or in the recorded version. We appreciate you, and we are grateful for you being here. Go ahead and leave us a comment, participate in the chat. Barb's there to help out with that as well. Now, as we get started, a couple of quick housekeeping items. As we kind of get settled for the day this morning, remember that everything we talk about is simply for illustrative and educational purposes only, not a recommendation of any particular security or strategy or instrument or anything else. We're going to be talking about a lot of different things here, whether we talk about futures contracts or whether we talk about indexes. Again, if we talk about futures contracts in this discussion today, these are not for trading purposes. We're using those as a measure of what's going on in the market. Now, remember, options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Also, we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. It's not a guarantee of future success out there in the real world, but it's a great learning environment. Make sure that you're aware, though, if you move your practice from paper trading to live trading, of some of the differences between those two versions of the platform. Obviously, past performance, no guarantee of future results. We're going to talk about the idea that investing involves risk, including the loss of principal. And we're going to make sure that we have a good understanding as we get into this discussion that today, as we look at the market, there are a variety of factors moving the market. Not all of them are technical. Some of them are fundamental. Some of them are probability based. Schwab doesn't recommend the use of technical analysis as a sole means of market research. So let's talk a little bit about where we are headed. We're going to talk about the general trend of the market today. We're going to talk about some of the sector movement that's going on, and we'll look at some individual charts. We still have a lot of earnings still left in this earnings season, but it certainly seems, though, this morning on this Thursday morning that rates are perhaps the primary focus. So let's take a look here really quickly, and let's pop over to our Thinkorswim desktop software platform. And as I do this and bring up our index grid, I'm just going to remind you, it's a good opportunity to click on that subscribe button down there at the bottom of the page. That subscribe button connects you to the Trader Talks webcast community. It also helps to pop our content up to the top of the algorithm. So does clicking on that like button. So if you like something that you see, click on that like button. That's going to help to bring this content out to other people. And this subscription is at no cost to you. So we appreciate you doing that. Again, I said this before, I'll say it again. We are very grateful to you for being here as part of our audience, for being our clients, and we want to help bring you the best education that we can. So taking a look at the S&P 500 here this morning, overnight, the market was pretty quiet, and we can see that reflected in kind of this very modest opening this morning, down 0.24%. After the opening at yesterday's close. We didn't really see a big overnight gap from that pretty big down move yesterday, created in large part because of Treasury auction subscription on the 20-year auction being relatively low. And the concern there isn't necessarily that there's not a lot of demand for 20-year Treasury bonds. The concern overall is how is the U.S. managing its Treasury debt? I mean, going back to the beginning of the week and the late last week when we started to see some of the rotation coming in terms of the downgrade or readjustment, if you want to call it that, from Moody's in terms of U.S. debt and its credit rating, that's kind of started this perspective here. Now, here we are late in the week. But here's the thing to think about as we get into yesterday, even into today, that market participants, institutional participants, also want to go on vacation, right? Kevin Horner's out on vacation, Cameron May is out on vacation. People like to go on vacation, especially around Memorial Day. There are a lot of things going on here in late spring. And so volumes are relatively light. And when volumes are light, prices get pushed. So we can see days like yesterday. We can see moves like we saw in the NASDAQ and are seeing at the moment. Really not a lot of reaction, but just simply kind of sitting there. And if we take a look at the Russell 2000, a little bit more downward move. And again, rate sensitive segments of the market seeing perhaps a little bit more influence. Now, one that we don't typically look at in this index grid, but I'll pop it in here just so that we can have kind of the full view of this, and that is $DJI, and that is the Dow Jones Industrial Average. And we saw Dow really kind of seeing the first initial moves of that down move yesterday, simply because the primary components. Remember, the Dow is only 30 stocks. They're blue chips, which means that they're not typically growth stocks. They're multinationals typically, which means that they're impacted by news around the globe more so perhaps, and currency impacts more so perhaps than other individual equities, certainly more so than the small caps. So the Dow 30 got punished yesterday pretty hard, at least initially. We don't oftentimes look at this, but this is one of those areas that we started to see that. The big drag yesterday in the Dow was primarily from some of the healthcare names, specifically United Healthcare. We'll take a look at that a little bit later in the discussion, but can see a little bit of a turnaround happening here in the Dow Jones. So let's go back to the Russell 2000, kind of pop that back up here, seeing that little bit of a downward move, push to the downside. And we can kind of see that happening. Carol asks a great question. And the question that Carol asks is, was there any way to know that there was going to be a treasury auction yesterday and at what time? Yeah, they don't just pop these up and say all of a sudden appear on the courthouse steps and say, here's the auction. Those treasury auctions are well publicized. They are generally well attended. And they are not something that is a surprise. And the results of those things, those treasury auctions, aren't necessarily a surprise either. So let's kind of take a quick half step to the side here. We go back over here to the Market Watch tab. We'll go to the Calendar tab. And you're going to see, if you look in the Calendar tab and you look at, we'll just take all of this off and we'll put Econo Day events on here. You're going to see things like treasury auctions listed in the calendar. So today we've got a 10-year TIPS auction. You're going to see those things happening here, and you're going to see those in this calendar as well as other calendars. We'll take a look at a couple of other news sources, but you can pop this open. You can see the information about it. You can see what happened in the previous auction. You can see what's expected in terms of the auction, in terms of volume and size and so forth. And there are other, sources in which you can go to find that information. So, the federal government, the Treasury Department publishes all of the information about the auction afterwards. And that can be at Treasury. Thank you, B. Hall. Treasury Direct publishes that schedule. That comes straight from the Treasury, and so you can see all of that information. But I think it's a great question to have. And I think the follow-up question is, does this cause jiggles in the market? Does this have an impact on the market? And it certainly does, not necessarily on a regular basis. I mean, if the market were rolling and rocking and rolling to the upside or to the downside, a Treasury auction and a lack of subscription to a Treasury auction is probably not going to have as big an impact as a day when the market already was kind of at a standstill. It was kind of at that stasis point. And if you think about what that auction means, it just simply means, where is the purchasing of bonds happening and at what place on the the yield curve out into time, right? So the expectation is that longer term bonds, because there's more time, but there's also more time to recover, are going to have perhaps a higher yield simply because there's more time for things to happen. Shorter term time frame oftentimes is referred to. If we get really short, then we start talking about things like the risk-free rate, right, which is the overnight rate. And then you start to get into shorter term impacts and so forth. That yield curve gives us a perspective of where in that duration time frame investors, sovereign investors, bond investors, those that are investing in fixed income, like to see where that risk is. And when those changes happen, right? And let's do this. I'm going to pop over to my grid, my single grid, which is my kind of playground here on the chart. And I'm going to pop into /10Y, which is the 10-year yield futures, not the bond futures themselves, but the 10-year yield futures. So this is the yields. This is reflective of an inverse relationship with bond prices. When bond prices go down, yields go up. When bond prices go up, yields go down. So when there's more demand for bonds and those prices go up, yields are going down. And we can kind of see that reflective or reflexive nature here. So with the 10-year on the rise, and the 10-year is the yield that impacts things like credit cards and mortgage rates and auto loans, those types of things, consumer loans largely, that kind of fits that time frame. You see that these rates have been on the rise. In fact, today pushing briefly above the 4.6% level. We can simply take this number and convert that into a percentage, and that kind of gives you that percentage perspective. So maybe running into a bit of a perhaps resistance level here, although the futures, since this is a tradable instrument, we're not using it as a tradable instrument. It does function from the perspective of levels of support and resistance. But if we were to look at something like /2YY, this is the shorter term time frame, right? /2YY. This is the 2-year yield, and we can see those yields kind of staying sub 4. Now, if we were to go out to, for instance, TYX, this is the index that shows the 30-year yield. And this is kind of what I wanted to get to here is this 30-year yield. You can see that 30-year now moving higher up to, if we move the decimal point over, 5.12%, coming down from 5.14, almost 5.15% earlier this morning. That would suggest that maybe there's a little bond, a little bit of bond buying going on as those prices kind of reach those levels. So you look at this over kind of that perspective, right? We had the 2-year that's relatively low. You had the 10-year, which is kind of in the middle. Now you have the 30-year, which is rising. That's generally that normal curve, right? When that inverts, when you have front months or front end, shorter duration yields rising above longer duration yields, that suggests risk in the near term. That's when you get into things like recessionary pressures and those types of things. And there's a whole study, we have a whole division headed up by Kathy Jones and others on that team that talks specifically about fixed income. And you can find all of that information at schwab.com. But we can do something here really quickly. We can do, and I think I've already got this grid built, the 10-year and the 2-year. So this is the 2-year, here's the 10-year, and I don't think I have, do I have the forward grid? Let me see really quickly here if I've got that yield grid. Yeah, I do have the yield curve built. So this is the 10-year minus the 2-year bond futures. And this can kind of give us that expectation. Here's the zero line, right? And so we were inverted for quite some time up into September of, this was September of 24. And since that time, we've been uninverted, right? So the yield curve has been steepening again back into that normal relationship. but it does seem to be flattening a little bit, with the 2 years rising, the 10 years kind of coming up a little bit as well. And there you go. So George, you've got it right there. It's 10Y or /10Y minus /2Y. You can see that inversion, right? So the question is, and Zinc asks a great question here in this particular discussion, is could the bond market collapse in 25 without a stock market drop? Yeah, probably not. I mean, I think you look at the interrelationship, right? Between, if we were to put on this chart, let's do a comparison, COMP comparison, and let's put on here the SPX. So our comparison line is the SPX. And you can see how those move in somewhat correlated relationship, right? And then the question is, can you see a bond market collapse? Could you see a change in the bond market without it impacting the stocks? And probably not, right? From that perspective, and then the question becomes, as Zinc asks, what can the Federal Reserve do? The Federal Reserve has limited resources. Their really only direct effect is on the very front end of this curve, right? On the overnight rate. Let's come back over here to our single grid real quick, and let's do this. I think we can still chart this. IRX.X. This is IRX. Let's see if we can get IRX. Is the front end, right? So this is generally referred to as this 13-week as the risk-free rate. And all the Fed really can do is push this rate around, right? And change that overnight discount rate. So everything else is kind of like pushing on a string. Pat Mullally and I used to talk about this quite a bit in the show that we did in the mornings called The Morning Huddle. We talked about pushing on that string. So before we rotate into some of the other stuff that I wanted to talk about, this is a good opportunity for me to pop over here to, where are we? Let's see. There we go. Right here. Okay. So I wanted to pop over here to this tool. This is the CME FedWatch tool. Now, this is provided by a third-party provider. So this information is generated by them. It is provided by them. This comes from Fed Funds Futures. This is not affiliated with Charles Schwab at all. I'm simply using this as a measure of what's going on in the market. And this is the June meeting, right? So this is coming up on June 18th. These are the expectations. So the current target rate for that overnight rate is 4.25 to 4.5%, right? And the expectation to the tune of about 94 or 95% expected, and this comes from Fed Funds Futures contracts and that curve, the expectation is, and this is a pretty good probability, that rates are going to be left alone. This over here is the other side of that, which is about a 5% kind of the remaining there of a rate cut. So there's still an expectation of a potential rate cut, but that probability is a little bit, well, substantially lower, right? 5% probability versus 94% probability. But here's what's interesting, especially given what's been going on in those treasury auctions and with things like tariffs and with the tax bill that was voted on last night. If we go to the compare tool here we are. This is a month ago. So this is 1 month previous, the 22nd of April. And the expectation, if you look at the comparison here, the expectation then a month ago, and you remember that was right about the time of the Liberation Day announcements and tariff impacts coming home to roost. That expectation was the Fed cutting by a quarter point, and that probability was about 63%. You can see what's happened over the course of this last month. That probability of keeping rates the same has increased dramatically from that particular point. And you can see the percentage or the probability of a quarter point cut has gone down from 63% down to 5%, right? And if we then go out, and the other thing that we can do is let's take it back to this current and let's go out to the future meetings here. So the next meeting after June is the July meeting, and you can see that the probability of leaving it alone. So as we go further out in time, the probability of a rate cut, those probabilities start to increase. We go out to the September meeting, and you see that it's kind of balanced. That's where perhaps the likelihood of a rate cut comes in, because that's where we see kind of that diminished expectation of keeping rates the same, 30%, increased expectation of a quarter point rate cut, and a higher expectation of a half a point rate cut up to 17%. So there's kind of that perspective as we look out over the horizon, maybe not seeing a rate impact. Yeah, and you're right. I just wanted to break this down, George. I'm certainly well versed in this this tool, so I wanted to break this down into those three ranges. So June meeting, most current or most emergent, then the July, then the September, and that's where we're kind of seeing those probabilities. So let's do this. Let's pop back over here to the platform. And this is, again, a good opportunity for me to remind you, if you haven't done so already, click on that subscribe button. Now, as we jump into this discussion, the other things that I wanted to take a look at, we looked at those indexes. We kind of saw what was going on in this space. I wanted to see where that was coming home to roost and where we were starting to see some strength. And one of those areas that the bond market has an influence over, to kind of go back to that discussion, is /DX, the dollar. And we see as the bond market moves, the dollar has been moving as well. The dollar is going to have some functionality in terms of that bond influence, especially when it comes to sovereign debt, right? So this is the full faith and credit of the U.S. government. The reserve currency around the world is the U.S. dollar. But if rates are lower, rates are higher, that means that it may be cheaper for multinational companies like those in the Dow to borrow money in other currencies as opposed to the dollar. That's one of the reasons why we've been seeing the dollar futures and the dollar index here moving to the downside a little bit, strengthening up a little bit, coming below par just a little bit. But you know, if you put this into a longer term perspective, if we put this into a 3-year weekly chart, you can see that, you know, the dollar is not enormously strong, but neither is it enormously low. It's back down to the range that it's been. If we put this on a much longer time frame, let's go out, say, for instance, to a 15-year chart, you can see that the dollar is still very, very strong relative to where it has been over the last 2 decades, right? And so there is still a lot of dollar strength out there in the market, even though it's kind of gone sideways for a little bit. All right. Let's come back into this time frame. If the dollar is maybe bouncing a little bit today, pulling back just a little bit, dollar getting weaker means that dollar-denominated commodities, including metals, including crude oil, generally would be getting a little bit more expensive. When the dollar is high, those prices typically tend to come down because they're denominated in dollars. So the stronger dollar means those commodities are generally a little bit cheaper. But let's take a look at /CL and see what's going on with crude. Crude kind of staying still within this range. It's been oscillating between about that 57 level and about this 64, 65 resistance. And what's interesting is once we cross the Rubicon of that 60, kind of 67 level, which had been the level of support over the course of the last year, it's now staying kind of well below that range. We're seeing it backing off just a little bit today. But you know what? It is Memorial Day. Coming into Memorial Day weekend, we take a look at /RB. And again, not looking at this as a tradable instrument. This is gasoline futures. And those have still been on the rise, moderately on the rise here a little bit. And so that impact is certainly there. And that's, again, just simply a supply and demand. I know that one of the indicators that I listened to, one of the metrics is the number of travelers out on the road on a holiday weekend like Memorial Day, expected to be higher than it has been in the last 3 years of drivers driving. And so that may be a function of why we're seeing a little bit higher demand for this, right? All right. The other area that I wanted to look at really quickly here was /GC, and that's gold. And we see that gold was rising yesterday. It's kind of backing off again a little bit here. today, but seeing a little bit less strength in terms of momentum in the gold contract as gold maybe kind of moderates a little bit. As those rates come back down just a little bit, less of a rotation into gold. Now, one other thing I'm going to talk about, and then we're going to rotate to some individual names here, and that is /BTC. Now, I'm using this not as a tradable instrument. Again, remember that Bitcoin futures and other virtual currencies have their own risks that are substantial. They are again not backed by specie. They're not backed by fiat currency. They're not backed by anything other than agreed value, right, by fiat. And so that presents significant risk. So be aware of that as you look at things like virtual currencies, including Bitcoin. But you can see the Bitcoin rally above the 92, above the 100,000 mark, in fact, above these recent highs, and notching today, coming back off of that previous high, but seeing that move now, the high for this candle today, sitting at the high so far at 112,165, now sitting at 111,590, and Bitcoin continuing to move a little bit higher here. And this maybe has more functionality relative to those bond prices and bond yields. Again, going back and forth between, full faith and credit of the U.S. government versus full faith and credit in something. I don't know. All right, let's rotate back over here and let's take a look at what's going on sector-wise. I'm going to come back down to our sector index grid, and we're going to take a look at what sectors are starting to see movement. We certainly saw, and Michael Fairborn and I talked about this yesterday, talked about the sector movement that was happening, and industrials continuing to hook to the upside, discretionary continuing to hook to the upside. We had a bunch of earnings announcements that came in the retail space. We still have some earnings announcements in the retail space. Staples continuing to move higher, again, starting to turn back up again. But you can see the drag on healthcare, financials, which we're kind of out of that financial space earnings announcements. So financials ticking back up, although pulling back in the short term. That's a little bit of a lag against this move to the upside. Information technology a little bit higher, communication services higher. AT&T seeing a little bit of strength, and others in that space. Zoom seeing some strength. Utilities kind of coming back a little bit as rates back off just a bit. Real estate kind of stuck overall. So where we're starting to see, again, maybe a little bit more of that strength is coming in the industrials and the discretionary space. So let's pop over here to the discretionary space. I'm going to open up this particular chart by maximizing that sell. And you can see this has echoed what kind of the S&P was doing. We see that little bit of a bounce today in the consumer discretionary space. This is retail to a large degree. This is also, even though they fall into industrials, this is also to a certain extent airlines as a read on consumer discretionary. So you have a number of stocks that impact this consumer discretionary. So I want to do this. I want to pop back over here really quickly to our single grid, and we'll take a look at some of those stocks that have been seeing an impact. We talked about this yesterday to begin with. This is Target. Target initially getting hit, but the comment that Michael Fairborn and I made yesterday was that Target, despite the fact that they reduced their guidance, they missed top and bottom lines, we see this move to the downside, but there's still some resiliency here within this range. Even though the RSI, that momentum indicator, kind of broke below its diagonal trend line, still seeing some strength here in discretionary. And yes, I know it falls into staples, but it's largely discretionary. I think there's a lot of bleed over between these two. I don't know. It depends. I suppose it depends on who you ask. If you ask my wife and my daughter whether Target is a staple or a discretionary spend, they would say Target is a staple. You ask other people, is it discretionary? they're probably going to argue that it is maybe discretionary, but you have that discretionary spend. But you also have some others. We had early this morning, we had URBN, Urban Outfitters, with just a blowout move here to the upside, right? So the estimate was 81 cents. The actual was $1.16. So beating earnings and seeing that big move to the upside. In fact, almost coming off of this about a $10, about $12 move so far, about 20% to the upside here in Urban Outfitters. Now, the question is, and we've seen a couple of consistent, you look at the last three earnings, or the last two earnings, well, three now, including the one this morning, big move to the upside, beat on top line, big move, relatively big move to the upside, and now blowout move to the upside. The question becomes, is this a blow off top in these retailers because of that pull through ahead of tariff impacts, or is this a consistent trend that's establishing itself? And we can see that the RSI is continuing to move higher. If we were to take a look at some of the other retailers within the space that also are putting out earnings, TJ Maxx had earnings, and they kind of went the other direction. But again, remember, TJ Maxx is going to be one of those areas. Part of their business model is benefiting from overstock in other companies, from cheap shipping, cheap inventory. And so, you start to see an impact to their business model. Even though they beat top line, guidance was a little bit softer here, bigger tariff impact, and you see them kind of breaking this diagonal uptrend line. Let's see if the same thing holds true for Ross Stores, which I think comes after hours today. You see the same kind of trend, similar business model, very overcooked up into that overbought range in the RSI. The estimate, and again, we kind of see this perspective here. This is coming after market. It'll be interesting to see if this is an echo of what happened with TJ Maxx. Now, a couple of other retail news stories coming up. NKE, Nike, in this case, increasing prices kind of across the board, and you see a little bit stronger move this morning, investors kind of stepping back in. This is post the Foot Locker merger or acquisition, and kind of seeing this coming back to home to roost. Speaking of footwear, if we take a look at DECK, Deckers, we see that Deckers coming with earnings today, again, kind of poised here for that, maybe move out of a flag. Now, Barb Armstrong teaches on Wednesdays the Trading Flag Patterns webcast, or Trading Price Patterns webcast. I know she talked a lot yesterday about some of these flag patterns. I did the chat for her in that webcast. So kind of an interesting perspective that she has on that. Let's take a look at a couple of others, not necessarily specifically in the consumer space, but somewhat in the consumer space. ZM in the technology space coming with earnings. They beat on top and bottom line, but seeing a little bit of a hit here this morning after that beat. So maybe some profit taking going on in this particular case in Zoom. A couple of others in the technology space coming up with earnings today. INTU, Intuit, coming with earnings again, maybe setting up for a little bit of a bull flag. Workday, WDAY, also coming with earnings as well. And again, this is another area where you can go to that Market Watch tab, and you can go to the calendar, and you can turn on earnings, and you can see what those earnings announcements are. And what's kind of really cool about this is if you come into some of these earnings announcements and you open some of these up, you can in fact click on these icons, and you can get information about the earnings announcement. You can also get information if we turn on the conference call icons. Usually you can get a link to, depending on the company, not all symbols have this, but you can get a link to listen to the conference call if you wanted to jump into some of those news sources. One other in the retail space that I wanted to look at really quickly here while we were on this was Goose, Canada Goose Holdings. And the thought process here was in looking at this, again, this is consumer discretionary, this is discretionary retail, but beating on top and bottom lines here and breaking out. And the reason that I thought about this in looking at this is because I know that one of the things, if you've been in one of James Boyd's webcasts in the last little while, one of the things he talks quite often about is the idea of a diagonal breakout. And he says it just like that. And he emphasizes the importance of a longer term diagonal breakout, breaking above these highs or the trend of these highs. Because now something has changed, right? Something is not the same. And you can see kind of this breakout of this longer term diagonal downtrend line. Does this signal a shift, right? Does this signal, yeah, there you go. I'd never eat here. Yeah, does this signal that shift? And so I'm going to look at this from that perspective. And I'm going to say, look, maybe this signals a shift in perspective. Now, yes, it is running up against a resistance level here in this area about the $11.82 mark, right? So I'm going to draw a line right there. And it's running its head up into that resistance. Could that be a turning point where, you know, some profit taking happens? Absolutely. But look at what it's doing today, right? We get the gap up above on that shooting star. And in fact, so far this morning, that shooting star candle, this one, yesterday, we're seeing that little bit of a gap down and a rally, and it's overcoming more than about half that range of the, not just the real body of the previous candle, but the range of the previous candle. So if it can hold that level, that may be significant in terms of that resistance, right? So what I'm going to look at doing here in this particular case, simply as an illustrative and educational example, is I'm going to take this diagonal breakout and I'm going to say, look, we've got a level of support. It's the top edge of this gap. We saw that big gap to the upside. Also seems to be pretty consistent if we draw a line back across to the left, right? Confirm what's going on to the right by looking left, right? Look left to confirm right. I've got a level of support here, level of support here, level of resistance here, resistance here, resistance here, support here, and now support here at about this 10, we're going to call it 1020, just for easy math, right? And so we're starting to see that move to the upside. Yeah, but I mean, I guess the question is, Carol, I mean, who isn't having supply chain issues at the moment? Nevertheless, you know, investors are stepping in and buying this. So thinking about this from that standpoint, we're going to create an order here. And we're going to get into the trade where it is, and we're going to protect our position by putting a stop order in here. And then we're going to put an order in to add to this position if it makes that move above that, that next level. So what I'm going to do is I'm going to create this order right here, which is, okay, fine. Let's do a buy custom with OCO bracket, okay? And I'm going to get into the trade where it is. But what I'm going to do is do kind of an interesting thing. We're going to put our stop order in, right? We're going to say, fine, we'll stop this trade out if this moves to $10.20 or lower, right? And what I want to do in this particular case is we're going to kind of create this trade. And let's see if we can do this. I'm just going to play around with this a little bit and see if we can put this order together. I'm not going to connect my link right here. So what I'm going to do is I'm going to first enter a trade of 50 shares, right? And then the second order, I'm actually going to change this side from sell to buy. And so we're going to create a conditional order on the upside, right? So what I'm going to do now is I'm going to say, fine, I'm going to buy another 50 shares. And I'm going to put in this order and to be safe, just so that if the second part of the order does not fill, I don't want to end up with an inadvertent short position. So I'm just going to protect 50 shares at the moment with that stop loss. I'm going to make that stop a good till canceled. But what I'm going to do is I'm going to make this order. We're going to get into the trade first, but I'm going to make this second order a buy stop order. Now, we could do it a couple of different ways, right? We could do it a couple of different ways. I'm going to make this good till cancel because I've got to have it the same order. But we're going to make this a buy stop. Let's see if we can do that. It's not letting me do that. Let's see if we can do that as a buy stop. You know what? It's putting it off to another side of my order here. So there it goes. Now we're going to do that. Okay, limit order. Let's see if it's going to pop in there. Why is it not letting me change that order type? So what we're going to do is we're going to come to our conditional order. And I think it's falling off. Let's see if I can find where that is going in my space here. It's not letting me make that conditional order. Anyway, my point in putting this order on, and we'll have to kind of play with this a little bit, but the idea was we're going to enter the trade to get into 50 shares, and then if it breaks above that $12 resistance, we're going to enter an order to get into another 50 shares, and we're going to put a stop order on it if it goes against us in this particular case. So what I may do is just create this as a conditional, and it's not even letting me take this order off at all. It looks like my platform is locked up. I've had this happen once or twice before. Yeah, let's see. Yeah, see, it's not even letting me unlock the price. All right, so let's see if we can do this here really quickly. And I might have to restart the platform. Let's see if I can restart my Thinkorswim platform. Let's see if we can do that. Nope, it's not even letting me do that. Yeah, I know. It's sometimes this has happened with my paper money platform. So what we're going to do, I'm prepared for this. We're going to jump back over here. And I know that some of you were asking about UNH. So we're going to finish up here on UNH, and we're going to see if we can pull this up. And there's always another way to look at things. So let's take a look at what's going on with UNH. I'm going to work on my platform here really quickly. Yeah, I can't even do anything. So I got to close the platform and restart it. So again, real time, things happen, and I appreciate your patience, but you can see what's gone on with UNH here in the last year. I'm going to bring this back to a 1 month so you can kind of see that downward trend. So it was already under pressure, but you started to see that move yesterday. One of the concerns was Medicare billing, and you can see that in the news about this particular stock. Some of those stocks, and again, here's United Healthcare, and you can see some of those impact. So Medicare billing and some of those concerns, they're pushing this price lower. But this was one of the big drags on the space, on the healthcare space, and also on the market yesterday. So the last thing I wanted to show you here really quickly, we're going to go back to our research tools. I'm on schwab.com, research tools, US markets. And this is one of the tools that I highlight on Fridays in the Market Mover webcast. But I'm going to come over here to the calendar, and I'm going to look at today's events. And we're going to see what's going on today, just to kind of get a sense of what's happening the rest of the day. Continuing jobless claims were up a little bit in actual numbers against expectation and against adjustments. Initial claims, on the other hand, were down a little bit against expectations. PMI in this particular case, a little more expansionary, so a little bit, but that's a preliminary number. So maybe a little bit more inflation, but also a little bit more expansion. Existing home sales were down relative to expectations. That's a bit disappointing for the market as well. But you can also see some of the earnings announcements that are coming up. You can see companies that are applying dividends today, conference calls that are coming up. So you get to see additionally some great resources here. And this is again on schwab.com, research tab, research tools, US markets. And then I came down to the calendar, and you can see that information about what's going on. So I'm going to be back tomorrow in the Trader Talks webcast channel doing Trader Talks in today's market. But if you want to learn more about some of the topics that we've talked about, say, for instance, fixed income, type in here, go to our Trader Talks webcast channel, fixed income or bonds, and if you click there, now you can start to see some of those additional resources that there are there. Some great webcasts. Guys, thanks again for helping out and for participating in the discussion. And I certainly appreciate Barb and her conversation out there in the chat. Thanks to all of you for being with me. I'm going to be back here at the top of the hour talking about long verticals and diagonals. So my thanks to all of you. My thanks to Barb. My thanks to our great production staff who helps to bring these webcasts to life, as well as our great reviewers. So thanks again for being here. We'll see you again very soon. Take care, everybody. Bye-bye.